Welcome to International Securities Exchange's podcast series. Facilitated by renowned educators, ISE podcasts are intended to teach beginning as well as seasoned investors the ins and outs of trading. To find an updated list of podcasts, please visit www.ise.com/podcasts. Please be sure to listen to our important message following this episode regarding the risks of investing in exchange-traded options.
Welcome, everyone. This is Steve Meisinger, your host for today's ISE webinar. Today I'm really pleased that we have John Person with us. John will be talking about spotting high probability trading opportunities for FX options. And John has written many books. He has a tremendous website, nationalfutures.com. He publishes his pivot points, so you can always check those out, among other great things. So please go to nationalfutures.com to learn more about what John Person has to offer. One other thing before we get started, please, you should really read the characteristics and risks of standardized options. You can get it at optionseducation.org. You can call them 1-888-OPTIONS. It's really important that you understand the risks and the rewards of options, understand what it means for strike price, option premiums, all the different strategies that are involved, and you can get all of that at optionseducation.org, or you can call 1-888-OPTIONS. Please do that as soon as you can. Without further ado, I want to introduce John Person. John, thank you so much for joining us.
Well, thank you for your kind introduction, and thank you for having me, Steve. And the IEC does a phenomenal job, no doubt about it, in execution, and I'm sure if anyone is out there and you have clients trading, you'll find that you get a lot of fills of various products in stock and stock option through the ISE's execution and exchange. The presentation today is really an interesting timing of event. I mean, I know I have done many and had a lot of invitations to contribute my work with the ISE, but today is something kind of really special, and the reason is because we're coming close to the end of the quarter, and we've had quite an interesting year so far, year to date, and just in the last 3.5 weeks, it was right around August 26th that the end of the world was coming, right, everybody? I mean, we were going for a double-dip recession. S&Ps are trading at 1037. The dollar was a little bit stronger. Everything was, in just 4 weeks, everything has been topsy-turvy. And what is now kind of interesting is that you're starting to hear that everyone is now bearish, the dollar, and we see the Aussie, the Australian dollar rally to making new highs. We see gold breaking out to new all-time highs, 1310 today. And, everyone's making a big issue about this. Today we had a really wild range in gold. If anyone wasn't watching overnight session, we saw gold trade as low as 1275 and then pop back up in the day session to 1310. So we saw a $35 range today in gold, which is something we haven't seen in a while. There's a lot going on in the market, and it seems that everyone's starting to now feel compelled that they need to get bullish in equities. And I think that one of the things that's how this relates into the currency game is we see a lot of intermarket analysis interacting with each other. And what I want to present today is how we can take advantage of some situations that are developing. And for me, at least, as I was going through my notes and looking at some things, I was looking, and we're going to talk about the euro currency today, because the euro currency is actually coming across, as of tonight's close, a traditional peak from a seasonal perspective in the almost 11-year history of the euro currency. We have a seasonal tendency for a short-term interim top to occur on or about tonight. And what's interesting about that is that when you have a seasonal event where you see the euro currency peaks, it would help if it's going to peak that it would be rallying. And so you need kind of like the pieces to fall into place. And you know what, folks? The euro currency had a sharp rally today towards the close and all day. So what we might see is a potential reversal, and I think that's where we can start to develop how to take advantage of certain opportunities in the market. Now, the first thing that I want to discuss is this. Anytime you use seasonal analysis, it's not 100%. We could be, 1 year it could be a week early, 1 year it could be a week late. We take seasonal analysis, and what it does is it gives us the average date. So the average peak date is today. What's intriguing is if we can look at further studies and borrow information from the Commodity Futures Trading Commission, and we look at the Euro currency futures data, we would find that we are looking at small speculators and professional hedge fund traders, the non-commercial categories, are actually a little biased to the long side. So there are speculators in the long side of this market right now. So that tells me that there's potential room for short-term correction, either by looking for those who are long from a speculative standpoint to take profits in the market, or for those who may have joined the party too late, which is what unfortunately, a lot of novice traders, by the time they gather the courage to chase the market, it's their greed that enacts them to finally get in and say, okay, I'm finally in. And maybe they get a little bit of win in the game, or they got some, positive P&L going, and they feel very, highly confident in that position. And so today what we're going to do is look at why and how we can set ourselves up for an opportunity, and then look at different option strategies to maybe take advantage of the three types of what I call scenarios, or at least what I show people that can happen. I mean, after all, if a market from a seasonal perspective shows that it could go down in value, and with the ISE's Euro currency index, it's a mirrored, or it's an inverse relationship. When the spot euro currency goes up in value, the euro currency, the EUI, goes down in value. And the opposite occurs. When the euro currency spot, if you look at spot or futures, when the euro currency price goes down in value, the euro currency index goes up in value. And that's what we want to take a look at. If we're looking for a spot market euro currency reversal as of today to occur, then we want to look at bullish strategies using the ISE's euro index. So that's what I have in store for us today. Now, when I look at employing a position, the first rule of thumb is this. I want to know how much risk capital I'm going to put to work for me. Then I'm going to start to look at different opportunities. I might not go all in just one strategy. I like to diversify a bit. So perhaps I'll mix it up. And one of the things that we've done in the past and other, I think, people may have employed is that instead of going with a directional strategy, maybe mix it up a bit in multiple directional strategies, like a debit put spread on the IEU, or EUI, the Euro Index. So if we're bullish, we would look at maybe a credit put spread. And if the market sort of rallies but doesn't fall any further, doesn't really gain any momentum, just kind of stalls here, the seasonal aspects would look as if we were right, but the actual real reaction of the market, we didn't see a lot of market movement. So in that case, at least a slightly bullish strategy, maybe a portion of what I'm going to apply to the market, diversify and use in maybe a credit put spread. And then if I would like, I think I would probably look at towards some longer-term out-of-the-money call options for some highly leveraged rate of return, just in case we get a massive quick reversal. Many of you may have heard the news about last week's Japanese yen with the Japanese government intervention, and we saw a very swift, formidable move in the euro currency, and obviously being positioned in outright options and an outright directional play like a long call or long put would have been the most profitable and highly leveraged vehicle there is to use. But the chances are to actually time it exactly right and to be in the right strike price sometimes is a darn near impossible venture.
Thank you for listening to our podcast. To find more podcasts on options, stocks, alternative markets, and market data, please visit www.ise.com/podcasts.